Good morning. Welcome to another Gimbal Friday meeting. I trust your day is a good one. I didn't hear this as being recorded, so let me just double check on that. Doug, can you hear me?
Yeah,
And
gotcha.
it is being recorded.
Can't hear you, so
He
my
can't hear us,
audio is not working. We're going to just trust that others can hear. I'm going to put the disclaimer up real quick.
this will be a fun conversation.
I got my sound working, so I can hear Amanda now.
Oh,
so
okay,
that's good.
Woohoo! I'm gonna leave now. Take
Thanks,
it away,
Amanda.
folks.
Thanks, Amanda. I'm going to get this disclaimer going. I'm sitting in Owensboro, Kentucky today, and meeting with a client down here, and just working from the balcony of my hotel. And Doug looks to be working from somewhere in the middle of the Southwest. Doug?
Yeah, we are on our way to Naples area, and get the van loaded up, and the dog's here too. It's a good life.
That's wonderful. I am going to the share screen, share the disclaimer real quick. Sorry for this delay. I don't know if you can see the disclaimer, Doug.
Yeah, looking good.
Yep, I just said skiing on the Ohio River is not for amateurs as the added thing. My balcony is overlooking the Ohio River in beautiful Owensboro, Kentucky. They have done a remarkable job here renewing the waterfront to make it a welcoming place. And I'd encourage you, if you live in the tri-state area and need a little getaway, it's kind of a fun little retreat, particularly if you've got young kids.
You don't know how much I appreciate that disclaimer this morning, Keith. It today would have been one of my very good friends' 47th birthday, and he passed away in November. And he and I used to wakeboard on the Ohio River next to the barges, and so that just warms my heart that you've got that disclaimer on there today in honor of my good friend Spencer.
That's all right. Well, life well lived there. That's
Yeah.
this is there's a former marina just about an eighth of a mile up the little walk here, and I jumped on a houseboat in 1975, and about a quarter of a mile down the river towards Evansville, they threw me off that thing and threw me a tow rope, and I think it was, I don't think I was skiing behind the houseboat, but there was a runabout with us. And I skied from right here all the way to Newburgh, Indiana. And when I was done, my hands were stuck like that. I was too afraid to let go, because if I could kind of zoom in on what's going on out there, there are literal trees floating down the river. And so it's not for the faint of heart out there. It is legit.
No.
Yeah.
No. Hey, speaking not had two just wonderful conversations with clients this week. I wanted to share with you, and these are folks with eights in front of their age, and so they've been there and done that. And one of our clients, who's just a joy, every time I call, he's the type of guy that I'll ask you about your family, that kind of guy. And you know what he's doing? He's doing like big time Lego sets, like these types of cars that you and Caleb have done. He's doing those types of cars. Like these Lego sets are like a couple $100 a whack, and that, not just that, the time involved. I'm talking like 1,500, couple thousand pieces. And so he's doing this because of his mobility. He can't really get out like he used to. And so he's found something that is a challenge to him, something that he's really enjoying, and quite frankly, something that he enjoys showing off. And so that's been a real treat, just to hear about him. And then talk to another one of our clients who was sharing with me that she's battled some arthritis. But Keith, she's hitting the gym, heading to Planet Fitness 3 times a week. and then doing water aerobics 2 times a week. And I was just so encouraged by that because, these earth suits and bodies of ours, they require some maintenance, and that might be hitting the gym, or that might be building some Legos. So that's my encouraging message to me and to you and anybody else who's listening to this is get out there and get active.
No doubt. I was able to go to a Daviess County baseball game last night here in Owensboro, and I was just watching these high school kids play baseball. I was a 6'4", 170-pound catcher, and I was watching those catchers squat down behind the plate and just laughing about. I would be in a hospital for days if I tried to do what I used to do. But the cool thing is there's so much that we can do in our senior years now that maybe those activities weren't available even a decade ago. And one of our clients a few months ago, his site was going, but you can go online at the local library and get a lot of audio books. So even reading can be done for you, and not only on the public library, but I'm pretty sure you can go on some of the websites that have public domain books, and your phone or your computer can read those books to you. So there's a lot you can do. You can probably even dictate letters if you can't see or something, and print those off to people. So there's the possibilities of making the most even out of those maybe tarnished golden years are much greater today than ever before.
That's a good word. What should we dive in to the market, or do you have something else that you wanted to hit first?
No, we can dive into the market, and normally you all probably don't realize that we have multiple screens that I'm working from, and so I am going to be working from one screen here, and my skill set may be somewhat limited in doing this, but I'll connect us with the S&P here real quickly. And the S&P 500, we've been talking about trying to get over this 200-day moving average. And this week we had some progress that we really hadn't seen in a while. And we had some buying coming in on the S&P. Consequently, we dipped our toes into the water this week for clients. And we're just, I'll put my line pin on here, and temporary line. This is the 200-day we've been concerned about getting above and staying above that. And then this is the 50-day down here in the red. And you can see this week we came with some conviction above that 50-day, which is really good. It's an uptrend in the shorter term aspects of the market, and it looks really positive.
Yeah, and we had a really nice January, and as Keith pointed out, if you just look to your left and you see that high, that 41.95, the S&P during the month of January really rallied up, and then it gave some back. It dipped below the 200-day moving average. And so to see the prices coming back and the lows have been getting higher, that part's been very encouraging to me.
Yeah, and so what when we kind of look at that on a weekly chart here, this is kind of what started getting our attention right over here. These last 3 weeks where we've come off of this short-term low, not the low of the bear market, but this short one, we actually have 3 weeks of uptrend, and that first one kicked off with pretty high volume over there 2.5 weeks ago. So that's real positive. And if I switch over to the NASDAQ market, again, the NASDAQ's going to be your more growth-oriented companies. It's going to be driven still. A lot of this rally has been driven by what we call the FANG stocks. I don't even know if we can call it FANG anymore since Facebook changed it. Maybe it's MANG is what they call it. I'm not sure. But,
right.
So it's got Meta, Amazon, Apple, Netflix, Google. Maybe they call it Mangma or something like that. With Microsoft is in there as well. And so these things are starting to rally on, and again, 3 weeks of activity over here on the upside. And this over here, you can see this high we hit in January, that's where it'll be really interesting to see what the NASDAQ can do in the weeks ahead with regards to that. And I'll pull that up on the daily chart. That was around 12,270 right here is what it'll be interesting to see what this market does over here.
And if we had our way, what we would really like to see is some higher volume come into play, and that would tell us that there's conviction from the money managers and institutions and endowment funds. When those types of investors start investing back into the marketplace, we tend to see a lot of shares moving into the S&P or to the NASDAQ.
So one of the things I've been keeping tabs for probably more than a year and a half is a kind of little indicator that I had put together myself. I don't know if anybody else does something quite like this. It just kind of shows me what's going on in the marketplace. So this is a little spreadsheet that I have with our database. Has over 9,600 different traded stocks. Some of those are going to be exchange traded funds or real estate investment trusts, but just showing the general trend. And then the numbers to the right of this 9,600 are the number of those shares or those companies that are trading above those particular moving averages. So the first column is a 21-day. No, these are the numbers that trade below it. So the first column is those trading below the 21-day moving average of the 9,600. The next one's the 50-day moving average, and the next one's the 200-day moving average. And so this is the first week in a while that we've had less than half of those stocks trading above their, or more than half of them trading above their 21-day, so a real short-term moving average. The 50 days, a couple months, we're right at getting close to half of them are trading above and half and below. And then ironically, the 200-day, the longer one, right now we're right at that midpoint where half of the stocks are right at, above their 200 and half are below. We see where we teetered off of that last week with almost 5,300 of those. And simply all that tells us is the breadth of the market. When I say breadth, how many of the stocks are actually starting to show some life? Because we've been in a market probably a decade or so. A lot of the indices are driven by those FANG stocks that we mentioned, and we really would like to see a broader embracing of this market to feel comfortable putting more of your capital at risk.
And that's the part that I like about this the most is we're listening to Mr. Market, and there's a lot of different opinions out there about what will happen with interest rates, or is the banking crisis, is it over? Are there more banks that could fail? And so there's a lot of questions, but the market will tell us every day what the price is, how many people are buying, how many people are selling. And that's it's been a great guide to listen to, especially during these last 18 months.
Yeah. The journey of living life to the fullest and using our resources, our money, as the gasoline to live life to the fullest can sure get disrupted by a bear market or a recession in the economy. I wouldn't be surprised that we'll see a recession here announced before too long. I've noticed a number of companies laying off people. Even in the last week or so, I noticed a company that's privately held laying off people. And normally the privately held companies have a little bit more staying power to stick with their employees than the publicly traded ones. And so those are all symptoms that a recession may be on the way, but a recession doesn't correlate necessarily with what the stock market's doing. And so that's the part that is oftentimes for investors hard to get their brain around.
I see I've got an internet unstable here, Keith. Hi from Gainesville. We know some friends down here, but yeah, you're talking about the market and it being an indicator. And a couple things I wanted to run past everybody to encourage you is we're in historically a pretty good presidential election cycle for the stock market. The third year of a president's term and the fourth year, those are traditionally good times for the market. and they're good as the president and their team. They want to get reelected, and so they've got their best foot forward out there. And so doesn't happen every time, but the third and fourth year typically have been good in the market. And then there's also some future indicators out there. They're not gospel, but do you remember this one? Sell in May and go away. And so there's seasonal times that are really good for the stock market. Like historically over the last 50 years, December's a great month. January, November, all good times. And so the market is looking ahead and it's trying to say, hey, this is what the economy might be in the next 16, 18 months. And so I get excited thinking about those indicators like the presidential cycle or even the seasonal, and just say, okay, what could be out there that could spark a rally? And the last thing you want to do is put all your hope in one of those. But but those are historically times when the markets tend to do well.
That one of the kind of slides I was going to show today, I'll probably show it next week, was a list of bad news things that occur and in different times, and how those would suggest you should avoid the market if you read those bad news. In March of 2023, I think if we went to the daily headlines, it was a pretty rough month of news for different things. I could throw them out there and let you ponder them, but you can think back yourself some of the things that happened, some of the things that have contradicted some of the things that politicians have said and done, and a lot of things. We had this past week, our heart goes out to those families in Nashville. Just a variety of bizarre, unusual news things came in the month of March, and that could get you emotionally charged to go in the wrong direction. But I think of this riverfront that I'm looking at right here as just a real life example from growing up in Evansville and living, near the river. I always thought of Owensboro. My friends at Owensboro, I hope don't hurt your feelings, is like the stepchild that I didn't. It just was not something that I would want to even mention. And a friend of ours who lives in Gainesville had told me that they were doing some contract work in Owensboro, and I said, "Well, my heart goes out to you." And that's been a number of years ago. And then I had the occasion to come down here, and it's like they have done a marvelous job of transforming what was something that didn't appear possible not too many years ago. And so in the markets, they can turn much faster than say a riverfront can. So don't grasp the pessimism that might be out there. Just look optimistically at what the future might have in store.
Yeah, I couldn't agree more. That's kind of what we were talking about this morning, wasn't it? There can be a supply of capital. Is that often talks about the crane index, and even just rolling through Atlanta yesterday, the crane index was strong, and there were cranes everywhere downtown, and that really impressed me. It's good to see some guys and gals putting their money together and building things, taking some risk in a downtown area.
I mentioned this to you earlier, and I'm not trying to be political in any way, but I think the fellow's name is Vivek Ramaswamy. Is I don't know if he's running independently or what he's doing for president, but I was listening to a podcast from him, and he was throwing out some really positive ideas, risky ideas, I think is what he was throwing out. But I think that's America. I think America has just been a risk taker historically, and I've kind of displayed my disdain for state, community, and federal governments and them spending money like drunk sailors. And just listening to Vivek, if I'm saying his name right, the idea that we as citizens step up and take responsibility, whether it's at the polls or wherever, to push back against some of these things where the government spending has been out of control, I think is a big deal, because my experience is that people that take risk with their own capital are much more productive with the outcome of that than when the government takes risk with your capital.
Yeah, and to have a calling for creativity, I think that's what makes the marketplace so great. Is you can bring what stirs your soul to the marketplace, whether that's a product or service, and then who knows, might attract some venture capital money, then it might hit Wall Street.
Absolutely. Or maybe not. Maybe you can just keep it private and have a spectacular private business that doesn't get polluted with all the limitations of a publicly traded company. Let me show a couple of things that I was looking at this week. All right, there it is. I've talked to a few people in the last few weeks that have had concerns about their banks because of the news this month, and that's one of those headlines I was mentioning, that there's definitely challenges in the banking industry. And so this is a well, my skill set's kind of challenge here. Give me a second. I've got your mug over what I'm trying to point on the screen there, Doug. And so
I had yours. I had to drag you away.
Yeah, so hopefully all can see this. This is a chart that I hijacked from one of the people I follow on Twitter, and it shows a historical chart of money in money market accounts. And that's what, with your money, this goes back to 2020, and it's kind of what a good amount of your money is invested in right now at Fidelity. And a money market is not FDIC insured. Hopefully we've said that before. It is short-term, often treasuries or other short-term high quality bonds, and they have been a place of safe refuge, but they are a risky asset. Like all assets, they're priced at $1 per share. The phrase that freaks out the market is called break the buck. If a money market drops from $1 a share to 99 cents, it can create the same phenomenon as a run on the banks does.
Yeah, I'm not surprised to see that asset increase. It's bold, but there's limited options, especially if you have more than 250 in a bank. So I'm not surprised to see this.
And this also speaks, again, I don't want to sound Mr. Negative, but like the regulators and their inability to actually regulate in whatever vehicle you can pick the industry. I'm just talking about financial ones. Is that if Silicon Valley Bank had 96% of the assets that were uninsured, if I just explain that to a fifth grader, I think they might be able to understand that means that money can flee very quickly. The money over the insured amount, those people are not planning on leaving that money in there if it's at risk. And these money markets were available to those people all this time. And so they didn't have to have it in the bank. They could have had it in a money market. And so there were risks that they chose to take that the federal government bailed out with your tax money. And so that money, a lot of that money has shifted in the last 3 weeks. $300 billion has gone into money markets. And we're telling you today that it is a relatively safe thing, but it is not FDIC insured. And if that creates any questions for you, please call us. We'll talk you through it, make sure you're comfortable with it. But we one of the first things we did with Fidelity is Doug had a long conversation with Fidelity back probably July, August, September timeframe, I don't recall, talking with one of their gurus about money markets. And we were having that conversation on your behalf, understanding that these things could have risk, and we wanted to understand exactly what that might look like for you.
He's the coolest guy in school right now. Everybody wants to talk to him. But back when we were talking to him early on, I don't think his phone rang much. But yeah, money markets today are a hot topic. And there's government money markets. There's corporate money markets. There's all different types of assets that a person could have invested in a money market. It's kind of like a mutual fund in a way, because you have a collection of different securities stacked up into one place.
Absolutely. And again, these things, I think there was one that was right on the verge of breaking the buck in 2008 recession, and it freaked out the marketplace. I think they ended up having to liquidate that one because of the chaos that was created with it. But I think I've got in my notes, and I don't have my notes in front of me, I think the total of these that have broken the buck since the 1970s is 9 of these money market funds. I would guess there's been hundreds, if not thousands of them since then. And so it's a possibility, but at the same time, everything you do has a risk. And so I know most of you wouldn't go skiing on the Ohio River. However, I think sitting here on the balcony, all of us can do. And so I would put, relative to skiing on the river and sitting on the balcony, I would put a money market more like sitting on the balcony.
That's pretty good.
Yeah. Here, let me show you something else I had saw this week on one of my Twitter feeds. I thought was interesting. And this is, I don't know, Charlie Balelo, but that's who posted this. And so I'm trusting his data on this. But and this is our friends to the north, but this kind of comparison makes a lot of sense in a lot of ways in life. It's showing since 2003, January 2003, the home prices in Canada relative to the Canadian inflation rate. And historically, I know every house I've lived in the Indianapolis area historically has just grown at the inflation rate. It has not set the world on fire. And so to see something that has gone up 6-fold and 7-fold at its highest level greater than inflation, the point was you might think there could be some risk there, because how this slide relates to the average investor, average Canadian, is that their cost of paying for a house has gone up much faster than the cost of other things. Consequently, they're probably house rich and cash flow poor. And the statistical term is called regression to the mean. These ideas can't sustain themselves indefinitely without something breaking. I think I've even seen some of this same idea true, and even Indiana. You know, that I met with a young mechanic who moved here from Venezuela this week, and he lived in Miami for a while and realized that the housing costs there were too expensive, and he simply Googled where is a reasonable place to live cost-wise, and that's how he ended up in the Indianapolis area. And so inflation, if you want to understand inflation, go study the last 25 years in Venezuela and see how detrimental that can be. And so people are kind of unconstrained by borders anymore. And so the demand from people from, say, California or New York, those houses are being sold there, and people are moving that capital to other places, which can push up, say, even Indiana housing prices for something that you hadn't even anticipated in the past.
Well, Keith, I think we're about out of time for the day. But man, it's so cool to be with you this morning, even though we're different zip codes. And it's great that we can do this. I'm thankful for the folks at Zoom. They were way ahead of the game for COVID, but yet even being able to do life like this is really cool. And we've even been having some meetings doing Zoom like this. And so that might even be something some of you all might be interested in the future too.
Yeah, just know that we are available. If you need to talk to us, we can do Zoom calls. See, some of you on the call today are in completely different zip codes than we are. We're happy if you need a meeting to jump on Zoom or the telephone. We're available for you. We're thankful for you. And we know that your life is the biggest deal that we're concerned for. And we hope you can make the most of it today.
Have a great week.
Goodbye.
Bye.